And we will welcome everybody here to the Independent Investor Channel. We are live here on a Friday live stream again for you guys. You know, it's awesome to monitor markets during times like this. It certainly validates what it is that we do and why we do it. It also helps to gain some perspective on what it is that we do during these times. It's a lot more well received when we talk about how awesome investing is during times like this, and certainly brings favor to the market. It brings attention to the market. You know, the Fed pivot this week was something that was long anticipated, but still fighting the effects of the global pandemic that was 3 years ago, and still feeling the after effect of that, and really the tough start to this decade. It's been a tough go for investors. Record numbers of investors have found it justifiable to remain on the sidelines. I very much try to dig deep and always try to stay on the front side of the wave in taking this opportunity and using all of our tools at our disposal to make sense of this opportunity holistically. Even though individually it is incumbent upon each and every investor to look at the very fact that your investment thesis, your portfolio, your tolerance, your goals are yours and yours alone. Very important to separate the methodologies, the discussion and the banter that we make around the stock market, and to make sure that we are using those as discussion points to look at your own portfolio, look at your own goals, look at what it is that you're trying to carve out in this life, and making sure that it is specific to you. That's it. It does not need to appease somebody that you do not know on social media. It does not need to appease your family or friends. It does not need to appease your financial planner as much as they would have you believe that they deserve your appeasement. The sheer fact of the matter is, with the dynamic nature of the stock market and how wild the swings are, even year to year, it is even more important for individual investors to acknowledge the opportunity. Yes. Acknowledge that even I contend sometimes that the access is so right there in front of your face that sometimes even that can be a little bit dangerous. I had a colleague come up to me today, show me his Robinhood account, and said, I threw $300 into a Robinhood account. I bought 10 things. I had no idea what I was buying, and I'm up to $800. What should I do? You know, I think it speaks to people's desire to put some capital to risk if there is, in fact, some identified surplus capital in your budget. I think people can resonate with this idea of being a participant in the stock market and do so in a capacity that would allow you to enjoy the fruits of everything that the stock market has to offer over the long term, and not get caught up and not really get caught up into the allure of what the stock market can deliver as well. So very, very important to acknowledge the importance of the stock market. I think that if you were to look at it from an objective lens now, I think you could very quickly, at least our young community personnel that make their way to the Independent Investor Channel, and look at the stock market and say, Ryan, this seems crazy to me. With all the opportunities out there to make money, And I want to caution everybody, especially the young people. I think we're uh, dealing with a generation that is ultra smart, that has probably too many opportunities in front of them to choose from. And I think sometimes that can be problematic in that I think there's a perception that whatever opportunity is chosen in one's career path or business choices is going to automatically render successes. I really wish we lived in a world that that was the truth. Um, I want to bring you back to some level of reality and remind you that hard work is absolutely the key pedigree to making it in this life. And I think all too often this generation would look at the opportunity that I know exists through my lens, and I could be completely wrong. I don't believe that I am. I think you're taking more risk by not participating in the market than entertaining the idea of putting some capital to risk to the scale that you deem necessary. But I think it's very, very easy to look at this stock market and make no sense of it whatsoever. I have no idea what this is about, especially during down times. Um, I have been steadfast on this project. I lose track sometimes, but I think we've been doing it for about 7 years. I've become very razor sharp with putting forward the dialogue that I wish to convey, no more, and maybe more importantly, no less. Now, no more means that I get on here and try to sell a hype train that I know in my heart of hearts does not exist for people. Okay. So if I'm speaking to that young audience that looks at the stock market as crazy, I can take that crazy emotion and kind of spin it on its ear and lead those people to believe that it is a casino handle and all that they have to do is just pull the handle and riches will be bestowed upon them. It will fall from the heavens and fall in its infinite nature in your lap until you have everything that you need to be happy in this life. My responsibility on the independent investor channel is very, very real. There have been ebbs and flows through the channel, that of which really I can chalk up as being a human being. And that allure of the stock market that I speak of is very, very real. There was anticipation over the last 3 years of an inevitable upswing or coming out of the darkness that always seems to present itself at a time that is unforeseeable outside of just looking forward and saying, look, there has to be better times on the horizon. While we go through those deliberations and hard times, it is doubly difficult to continue to stay positive when the consensus over markets is negative. When the consensus is sensed to be negative in the stock market, media will pile on. Social media will pile on. And you are left to understand nothing more about the stock market than it being an absolute vacuum for your capital. And it is not an arena that you as a young person are interested in dabbling in, because when you look at, 100 or 500 or $1,000, you look at that as a means to put gas in your car. You look at that as a means to survive until the next month. You look at that as a means to bridge the gap to unforeseen expenditures that may be incurred when your life is in your early 20s and you're going through those dynamic shifts. I have been there. I've done it. It's a miracle I even made it out of my 20s, for crying out loud. There's probably some people in the community that could actually relate with that. Kids nowadays, I think, have it really difficult. There's not a day that doesn't go by where I'm super thankful for growing up in the country the way that I did, and um, learn those lessons of hard work and going through those trials and tribulations, and really not having a lot of the outside influences that are rampant now. I mean, I remember when cell phones were invented. So, with social media being right there in your face, one can only speculate on how that's influencing our youth to understand what is possible in nature. It relates to the stock market in the same light. Whereas a young person, I would seek out my opportunity because the opportunity was perceived to me to be very, very lean, if accessible at all from a remote distance. Now all you have to do is just download any one of 100 apps, and you're off and going in the stock market. And you can be off and going in the stock market in whatever capacity you choose. If it makes no sense whatsoever, or if it's one of those things that you know nothing about, but you want to get started, and you jump right in with both feet, you can do that within a 10-minute time period. And I think that's scary for a lot of investors out there. I think that the contrast between what people think they need to know and what they should know is very, very different. I think what people want to know is a far cry from what they should know. Um, I think maybe it is prudent, absolutely, to not buy into that euphoria that is sometimes beset upon a market like this, that is easy to get excited about. Look, the title of my video this evening is, 4.5 stacks of high society up in a month. I'm not surprised one bit. I'm a seasoned investor. I don't invest necessarily for the money. The money is a byproduct of a well-laid plan. I've said that through the course of the channel. And if my dialogue is different than what you're used to in a money channel, or a financial wealth building channel, or the dreaded stock market channel, be refreshed by that, because the second that I have social media content creators talking along the lines that I speak, I will continue to do this project. The staunch reality of that is that not a lot of people look at wealth building the way that I would suggest is the most prudent to view financial markets, through the lens and the philosophy that I talk about. It has to be something that you're willing to integrate into your life and be with you 24/7. It is a way of life. It can certainly govern the decisions that you make, and it can certainly set you up for things that, if you come from nominal means and you come from humble backgrounds like myself, ask yourself the scary and rhetorical question of yourself: how, based on the privilege that you have been provided in this life, or can realistically provide for yourself, what type of lifestyle do you realistically believe that you can carve out for yourself over this life that you've been provided for, let's say, 80 years? All right. Would it benefit you to infuse a little bit of oomph? Would it benefit you perhaps maybe to tune in to the I2 once a week and get a little bit of spiritual and philosophical motivation on the stock market? Now, for you guys that are astute subscribers and astute investors, and the type of community that I want to attract, are those people that understand that your day-to-day routine really should be, until you're wealthy, consumed by some level of employment that makes you happy. Investing to make a living is not something that I get behind. It's not something that I teach upon. It is not something that I, again, look to take that euphoric excitement for wealth building in new uh, participants in the market and jade in any way. You are the most vulnerable that you'll ever be in your investing career at the beginning of when you start investing. The hardening and the forgery happens well in excess of having multiple years before you're forged in fire can actually stand up to somebody like myself or all the other influences in society and say, you know what, Ryan, I hear you, but that's not for me. Okay. I'm very well laid in my program. All right. Instead of just, hey, I tuned into these half a dozen YouTubers. I picked up on this, and this. I put them all in a stew pot. I mixed it up and it tastes really good. This is now my portfolio. I have no idea really what it means for me long term. And I have no idea how I'm going to continue to eat this stew for the rest of my life. But this is what I have. Why? Because it is everybody else's program. And I failed to adhere to this idea that the independent investor channel is about looking within and identifying what it is that is going to work for you over the long term. Okay. Stock market doesn't necessarily change so much. People think that it does. Over time, it goes up and slightly to the right. Yes, companies grow, profits grow. Opportunity has been proven to grow, at least historically. Large drawdowns through recessionary periods, through different economic cycles, et cetera, et cetera. But for the most part, the economy is ever expanding. And in 2023, I have no reason to believe that that expansion is not going to continue to happen, right? That dynamic nature of the stock market has always kind of been there. What has radically changed over the last, let's say, 20 years since the start of this new century? What has changed radically is the availability of information. It is information overload. It is information aimed at influence. And for that, you need to be, I will caution you to be careful of that. There's been a significant amount of algorithmic trading and quantitative trading, electronic trading. I've been to the New York Stock Exchange now 4 times. And when I talk to the traders down there, it's amazing how they tell me, they're like, Ryan, things have changed so much over the years. This all used to be paper changing hands down here. Now everything is done electronically. And that's true. The small desks that you see, all of that is dealing with thousands and thousands of transactions, all electronically. It's extremely impressive how we are here in 2023 to look at the convergence of availability of information and where the prospects of that emerging technology could lead. I bring it home in thinking about these things. And instead of tuning into the independent investor channel to get your answers spoon fed to you on a silver plate, the cool thing is that we like to provoke thought. We like to give you the opportunity to entertain what this opportunity can mean for you by the exploration of different options out there. And some of those options are ones that everybody is familiar with. But if we mention certain buckets or opportunities in a little bit more of a detailed fashion, all it means for you is just a further definition of terms in what a lot of people consider to be a very, very confusing landscape, that being personal finance and wealth building. My friends, this is my calling. It is my hobby. I've done this my entire life, and I'm super privileged and I'm super proud to be closing out 2023 with you guys on the Independent Investor Channel. As we look forward to 2024 here, it's going to be bright times in the future, and I'm glad to be on this ride with you. Be back with you in just a moment. See, Becky, you tune in to the Friday live stream, and I get to take you ice skating in Central Park. You get to walk the Brooklyn Bridge, and you get to take a helicopter tour around the crown of the Statue of Liberty. We are coming to you from the most powerful city in the world, New York City here. I'm glad to be back in the roots of New York. We're going to be here for a while, and I'm happy to broadcast the show from there. This is the Roots of the Independent Investor channel, always will be, and that's the way it will be for the foreseeable future. Very, very cool stuff. So the huge announcement this week, and great to see you, Becky. Thanks for coming on. I appreciate it. Um, the big going on this week really was the pivot of the Fed Chair, Jay Powell, in his address to at least continue to break what has been a three-pause Fed Chair meeting of the prime interest rate, and to allude to the potential for ceasing any more rate hikes going forward, and the prospects of entering into 2024 with rate cuts on the table, at least. I believe that I take those as a grain of salt a little bit in understanding what it is that we know, and not being so presumptuous going forward on what that could potentially mean for my money. In other words, am I going to remain invested or am I not? That's a very, very simple question to me, as opposed to try to understand the effects of, 2 or 3 rate cuts next year, if at all. I don't believe that they should be so quick to cut rates, because cutting rates, it's a double-edged sword, could actually be viewed as a negative for the market, in that financial conditions have tightened. Labor markets would have continued to weaken, and the quantitative easing could be looked at as a lifeline to the markets. And so I think if we can remain in this state, the economy has been extremely resilient. I found the comments about, what this economy would have looked like had it not been for the overhang of high interest rates this year. Because, my friends, as horrible as the first 9 months of this year have been and were, of all the doom and gloom that we started out 2023 on, the inevitable 100% across the board consensus that we would absolutely have some form of recession this year. None of that came to a fruition. As a matter of fact, like typical stock market behavior, it ended up delivering on the opposite. We should end this year, up 10 to 15%. I think we'll probably end up closer to the 15% range. So almost clawing back what it is that we lost last year, which was the poor year, down 20%. And this year, I think to be able to come out of this with a net positive year is really good. I think a lot of people were calling for low single digit positive returns from this year's market, but the breadth across the consensus at the beginning of this year was absolutely atrocious. The reason why I give you that tone and tenor, and I don't think my observation is that far off. I really don't. If you guys think that you can watch mass media and get any type of usable information from mass media, please correct me. But I think all too often, I think they have a very, very short memory, in that I think the latter part of this year in 2023 should actually be filled with them coming on and apologizing to the general public, because all of the pundits, all of the visitors that they have come on and talk about doom and gloom, they all say the exact same thing, and they all seem to think that they're super sure. Those same people, they come on right now and they just punt it until 2024. Well, it's going to happen in 2024. And it misleads people in where I think the focus should be, and that is we have a stock market. The stock market goes up and down. How is it that we can look at the opportunity made possible through the stock market to benefit over the long term and grow wealth using the stock market? Look, if that's not possible, I'll pitch the tent. Okay, I'll close up shop and just fire down the mothership, and we won't do this anymore. But the reality is, I look over pockets of the portfolio and it's just unbelievable. Really, over the last 3 years, my safety net, my safety net has been dividends. We started both of the M1 Finance accounts back in December of 2019. So just over 3 years ago. The other one was in March of 2020. Those accounts, three of them, the one I started a little bit later. Those two accounts, from an accumulative perspective, are approaching $100,000 of aggregate wealth. That's 3 years. So when I talk about dividends kind of being a little bit of a saving grace over the last 3 years, I'm not kidding. I'm really not. The fact that I have, through the last 3 years, and really going back over the course of my entire investing career, have always talked about the importance of cash. That's just for me. Now, I will say this. I'm full well understanding that the bet on cash over the long term will probably turn out to be a losing proposition. Okay. What I mean by that is, if I took the days from now until then holding cash for the peace of mind that I get and the opportunistic nature that I use when I have that cash buffer over the long term, as opposed to taking every waking dollar that I have and subjecting it to risk in the stock market, the latter option would probably pay out to be a better option over the long term. Okay. I do acknowledge that. I really do. However, I don't look at my portfolio as a collective whole in this sense. I don't look at, because I devote capital to one avenue, that somehow it's taking away from another avenue or another or another. That's why I speak on different disciplines. Okay. The dividend portfolio right now, the one that I started in March of 2020, is approaching 50 grand. I've disclosed through the course of the channel, and I think it falls on deaf ears all too often, that the impressive part of that dividend portfolio is that it has been fairly aggressively funded. Just as of late, I started doing about $100 every 2 weeks. Nothing crazy. But the more impressive part of that is that those dividend payers, as crazy sick as Intel has been, and as crazy sick as Pfizer has been, and AT&T, which have been held in that same dividend portfolio over this long term, dividends rendered times 97 current holdings in that portfolio right now, over the aggregate of investing back into the portfolio, have built organic growth over that time with zero maintenance, zero fees, zero cost, zero everything. Zero. It has cost me nothing. Now, if I were to put a headline on there and say, Ryan approaches $50,000, make $50,000 in 3 years, right? People would be clamoring all over themselves. But there's 22 devout subscribers to the live stream tonight. My friends, I'm totally cool if there was nobody that came in here, because the methodical approach I take to the independent investor channel, and quite frankly deviated from for the last couple of years, I'm getting back to, and I'm steadfast in. And if I have to do it like this over the next foreseeable future, I'm totally cool with that, because those little nuggets of information are what people need to understand about long-term wealth building, and how they can look at specific pockets of wealth and really utilize those to their benefit. All right. Gain psychologies and understanding, what backing that, or peace of mind that it gives you by having that cash buffer. Right. Are you more prepared to deal with an unexpected expenditure in your life by having that cash buffer there? Probably. I take solace in that. Are you adhering to this idea that some of the surplus capital can be segued to that as one of many buckets over the course of your wealth building? Sure, sure. And you can kind of get this idea that I've had where I used to be an investor where I invested everything I had. And it got to a point where I was so heavy levered in the stock market holdings go up a little bit, and I'm suffering to even feed myself during that dynamic flex of being early 20s. And I was a complete idiot. I was all over the place. Didn't have money to eat, sleep, support my car, do everything that I was trying to do. No stable income, but I have this, you know, $10,000 portfolio, right? And it's like, my goodness, it looks far more attractive to actually live life at that time because you can't substantiate the value, or you've over levered to the market and not looked at the importance of allocating toward those buckets when it is prudent to do so, right? So I think when we build this out and we look at these different opportunities, we can discuss them without putting one red cent toward a specific discipline. I speak about dividend income as it pertains to me. I don't expect that you're going to look at it and fall all over yourself to say, "Yep, Ryan, that's for me." But perhaps maybe you can relate with some of the things that I have talked about in weathering the storm. I am impressed to look at some of those holdings over the last, let's say, 3 years of market volatility. And I'm encouraged to know that a lot of those weathered the storm well. They did not outperform by any means, but they weathered the storm. And now coming out of it, you notice the roll off in tech. Where's that money going? I can be slightly presumptuous on the channel and suggest perhaps maybe that is rolling into value, perhaps. And maybe as a secondary offering, I would say that it's probably flowing into one of the most undervalued sectors or sections of the stock market right now, and that is the small cap market. Okay. I think the micro cap market probably is going to be emerging from what has been a very, very dismal and horrendous phase in microcaps. I think the systemic shock that was put over the markets and the lockup of perceived capital has really, really put a lid on speculation for quite some time. It's been a desert. And if you suspect that it's going to change next week or next month or 6 months down the line, I'm not a fortune teller. Okay, I don't believe in voodoo. If you want to believe in voodoo, there's plenty of other channels out there that you can tune into that would suggest that they've got all the voodoo dolls that you could ever want. They'll sell you one for 10.99 if you join their private stock group. And you can play with your voodoo dolls all you want, and then let me know where the market's going, because I'm more in the camp of understanding that people don't know and can't know and don't know, and if they did know, they would make a ton of money in forecasting. There's people out there that have forecasted correctly, and that does not mean that they knew for sure. It just means that they made a hypothesis, and that hypothesis held true over the long term. Okay, but we talked over the last couple of weeks about thresholds of wealth. That was 3 weeks ago. Last week we talked a little bit about the number of holdings within each of those brackets, right? And so this week I thought it prudent to mention some of the philosophies or groupings of each of those individual holdings. Remember, we talked about the $500 holdings, we talked about the $1,000 holdings, the $10,000 holdings, 25 and 50, and certainly I see Matt Money there. Sorry, Matt, I didn't see you pop in there. I was in my zone. It's good to see you, brother. Happy holidays to you. Who probably has, upwards of six figures in one specific holding. Okay. But what philosophy is tied to that specific holding, right? Is it $100,000 in Palantir? Maybe. At this particular juncture, it might very well be the case where he's sitting on a real wealth builder in Palantir, and the holding is worth six figures. I would presume that for the novice investor who's just starting this craft, the idea of buying a couple of shares at 10 shares a piece is somewhat daunting. It was for me. I I've bought thousands of stocks since I owned my first 2 stocks, and it's fun to share and go back, and I'm certain that you can relate with this, remembering the first individual stock that you bought. Mine was AT&T, and Kraft Foods. Now, Kraft Foods, at the time, has done really well since then. AT&T has been an absolute dog. If you go back 10 years, 12 years, 10 years, it just hasn't moved. It's paid me a truckload in dividends. I think we're up to 375 shares, and I don't even know how much of that has been free shares awarded for holding the block position, but certainly been quite the value trap over the last multiple years. It's been a horrendous holding, but those are the most impactful trades that we make when we're breaking through to a grander philosophy and understanding that owning equities in your personal portfolio really isn't as scary as some might suggest that it is. And I don't think it's very unfair of me to come on and suggest that, because that is honestly how I feel. There was a time in my life when I had it in my mind that it was a scary thing, and I'm here to tell you that to be fearful and to look at financial markets with the correct level of respect and tact and defensive approach is absolutely prudent. Okay, I'm not saying go buy highly speculative microcap stocks that nothing about, and Ryan said have no fear, right? And you enter into these equities and you're surprised when you have a 90 or 95% drawdown. That's not what I'm talking about. What I'm talking about is buying established companies with a moat that have been around, tried and true, proven out to pay increasing dividends over the long term, starting at 25 years, right? With your aristocrats and looking at your dividend kings that have paid for over 50 years, and looking at those names and kind of starting there. If you can only afford one share of Home Depot, I'm okay with it. One thing I learned by investing in M1 Finance over the course of the last 3 years, in pursuing that $100,000 threshold within M1 Finance, guys, I am in the process of actually transferring away from M1 Finance, just for a disclosure of the group. I disclosed last week. I disclosed the week before that I think it is a wonderful wealth building tool for individual investors. I think it's great to get up to that first 10,000 or first $25,000 and allow M1 Finance to help you get used to passive investing. Number one. Number two is to help you organically grow a portfolio correctly. I think a lot of people are their own worst enemy in thinking that they have to use a traditional broker, which is a blank palette, and have to build that portfolio using that blank palette. M1 Finance does everything for you. It has just been an absolutely phenomenal experience being with M1 Finance. But I have a goal of bringing in everything under one envelope, and I plan on doing that and am in the process of doing that. Now, it's a like in kind transfer. All the assets will transfer like in kind to my new account with Fidelity. I did a lot of research. I talked to a lot of people, but there was a few people actually in the IQ community, one in particular that I really owe the greatest amount of thank you to for his referral to me and experience with Fidelity specifically. And I've had way too many positive comments come through for me, which really helped validate an over 25-year upheaval from Bank of America, just because the anemic rates that they were awarding on savings accounts were non-existent. I mean, really, I took it as kind of a slap in the face, and look, if I figure on idle cash, if I can make, 2.5, 3.5, he was making 4.99 at the time of the transfer, of the time of the recommendation. It's a far cry from the 0.01% that I was making on all idle cash with Bank of America. So for a guy who likes to sit on cash, there's a prospect there of making some really, really good passive income in those accounts on idle cash, and it was just a prudent move to do so. Been in the process of that for the last 3 weeks. It is not fun. I've done it probably more times than I would have liked. I really thought that I was very comfortable with Bank of America over the years. Unfortunately, it just the sign of the times led me to believe that physical brick and mortar banks are moving to a thing of the past, and the amount of overhead that is spent supporting brick and mortar locations across this country that never have anybody in them ever comes out of my bottom line, and I just didn't want to play ball anymore. It made more sense to transition over, and I've witnessed a few things over the last couple of weeks in getting familiar with Fidelity that I've made the right decision. So we're going to stick with that for sure. But the M1 Finance accounts will swap over. And we will dissolve away the M1 Finance. I will still keep the links to the accounts. That's for sure. If those links will still work, I believe that they will, because the portfolios are still relevant. That's exactly what I used to build that wealth over this time frame. And can the procedure, can the nature by which I deployed to earn wealth be duplicated? It can. This is the care and rigor I take over the message that I convey here in putting out information that if I came on and said, look, in 3 years, I'm approaching 100 grand, and there was no way for you to follow in that, that would be considered braggadocious. And I would be an asshole for doing that. Okay. The sheer fact of the matter is I don't have to disclose that over social media. The fact that I do shows my confidence in kind of shepherding a little bit through and doing a little bit of trailblazing, in that when I embarked on the M1 Finance journey, I had no idea what the end result was going to be. And I'm happy to report out to you if the results were the opposite of positive. I would tell you that's just not my experience, and that has not been my experience with wealth building through M1 Finance. It's just been a fantastic ride, and I think people could experience the same. Now, if you could do the same thing with Fidelity, it's just that you're going to have to incur a little bit of more traditional platform, okay, and a little bit more imagination, I think, in really building out a portfolio that makes sense. The structure that I have placed over the portfolio in M1 Finance really is the value. So if you didn't invest in the portfolios, I would at least look at how I broke down the structure. Okay. Very simple when looking at the 11 sectors of the S&P 500 to award specific categories or sectors, right? So as I was filtering in those dividend payers, it was very, very simple for me to look at healthcare in the acute and say, hey, we want to throw Johnson and Johnson, Amgen, Pfizer, United Health, right? AbbVie, Merck into the mix. And that's what we did. Very, very simple. Now, the dividend portfolio number 2 has additional holdings, right? Like Sanofi, some other healthcare names in there that helped supplement and augment the first portfolio. Those 2 accounts will be combined into one when it comes over to Fidelity. And I'm very, very excited by the prospects of it, because my goodness, guys, I look at that portfolio and it proved to me this, and I'll share something. There's 26 people in the live stream, and I don't care. I try to kick over as many, many rocks. If I thought that there was that golden thing for me to say, and you would go and just have this gold parachute, open up above your head, I would say it. I really would. But one thing I learned by investing in M1 Finance is that it forces you to take long positions on good companies. It forces you to understand that by nature of taking those long positions, that one of two things are going to happen. And both of these things happened. They are going to go through fluctuation, and good companies go into downturn just as easy, okay? Sometimes for no foreseeable reason, other times for reasons that you would have never foresaw during your research period or your understanding of deliberation between Lowe's and Home Depot, whatever, whatever. What you are going to find and learn very quickly is by observing those portfolios, stock goes up and down. It goes up and down. But the real takeaway from what I want to declare to you now is that a way, not the best way, but a solid, very real way that I think a lot of people do not pursue in wealth building is buying good quality companies for the long term. That is it. And I am sorry if that is cliche. I am sorry if that is Buffett worthy. Um, but that is the God's honest truth. And I'm not sure how you can have the validation to understand what I just conveyed to you unless you experience it for yourself. Yeah. Yeah. I can certainly bridge the gap for you between my excitement and my observations in looking at capital grow. Making dividends is free money. I work very hard every single day for my paycheck. I work hard for that money. Do I work hard for a dividend? No, no, come on. Let's be real. There's people across this world starving to death. You don't think I take that serious? You don't think that I want to convey a level of responsibility as an investor, as a wealth builder, as somebody who's teaching people how to wealth build, that they also have a responsibility not to act a fool? Earning a dividend is not hard. Investing is not hard. But I find it interesting, and what drives me on the Independent Investor channel is how often and how um, repeatedly retail investors royally muck this up. It can be fun. It can be very powerful. Doesn't change very much. It's the application. It's the infinite amount of applications that can be deployed to extract the maximum value from the stock market going forward. Yes? Right. So, how is it on an infinite landscape are you going to pick that one philosophy that is going to work for you? That one magic carpet ride that's going to carry you into retirement, right? Becky's in the group. She says she's very thankful because she found that one out of an infinite amount of possibilities, right, Becky? You got lucky. You picked that lottery ticket, right? And you got lucky, right? You, out of tens of thousands of people, were that one person that picked that strategy, that one unique strategy that was only unique to you, that isn't available to anybody else, to allow you to retire with some level of financial wealth into your future. Does anybody truly believe that? If I truly thought that that was the case, and we needed to rely on luck in our stock market application, I would fold up shop and I would shut the train down and we would cease to exist on this project because I'll be damned if I'm going to come onto social media and try to teach people how to get lucky. That's effing stupid. That's a waste of my time. It is futile. I don't teach people how to go about their life waiting for their opportunity to get lucky. That's insane. I don't do that. I don't believe in it. I believe, based on at least the rigor that I apply over my life, that there is some level, if not in its entirety, free will that exists in our action that can render a result on the back end. That's why I don't focus on the 45,000. I expected those results to be there. And I don't bat an eye sharing it through social media that that's just where we've been. We prepared for 3 years, right? I'm not going to sit here and tell you that I was happy over the last 3 years. No freaking way. I made a comment in the Facebook group today, not my Facebook group, another one with regard to some people justifying being down significant amounts on some of these speculative SPACs that came out in 2020. And I said, "You're absurd. Absurd. I'm happy that I'm down $100,000. I'm more bullish now than ever. You're an idiot. Okay? You're an idiot. You lost a ton of money and now you're more bullish. You're becoming delusional. And if I can impart to you anything by coming on to the independent investor channel, I would just suggest that the sheer masses of people out there do everything they can do to deploy a defensive approach to their stock market approach to avoid that like the plague. Invest close to the vest. There's no reason to dabble in that type of activity. No way. I mean, I know some of these people. They're independently wealthy, and by nature of being independently wealthy, it gives them the excuse to come on and make a post to, let's say, potentially hundreds, if not thousands of people that somehow they're okay with losing hundreds of thousands of dollars on a position. That is effing stupid. Mm-mm. Maybe it's because my feet are much more rooted in reality to suggest that the slow and the steady will win the race. The value investing approach will always play out over time. Um, don't get me wrong. I have speculative positions on right now. My most speculative position going into 2024 and my most exciting position, quite frankly, is the one that I share every week, and that's Aduro Clean Technologies. It's just that simple. That is a value play that nobody knows about. It is a value company that nobody knows about. It's a nice tweet that I saw observed just this evening when I was looking over 87% of all of the companies that have risen in the history of the stock market over 1,000% have started in the small cap space. 87%. Kind of cool, right? So it changes the expected potential for rate of return. In other words, when I invest in VYM, I have a pretty good idea of my expected rate of return, 6, 7, 8%. If I get 20% out of VYM, I'm falling out of my chair and I'm trying to figure out if I accidentally bought QYLD. Um, I'm not making 10% in VYM. If I do, it's a phenomenal year. SCHD, I own as well. Same thing. VIG, the S&P 500, VOO is going to be more volatile, but it's also going to provide a little bit more upward mobility as far as the prospects for higher end capital returns. I expect closer to 10, 11, 12%, on the S&P 500 with the expectation that it could be the same reciprocation to the negative on bad years. That's just how it is. But when I look at the opportunity and I share it across the board with you guys, I don't expect that you look at it and say, I have to dump all my eggs into this because Ryan's a bull on it. Ryan's a bull on it merely because I've made it make sense for me, and it absolutely does. It makes sense where I'm at in the time of my life. I have plenty of surplus capital. The position is relative to the total position in the portfolio, and that's just where we are. And I'll share that. And, look, if I'm going to continue to be wrong on this or any other speculative position that I put on, then you can call me delusional because it does no good to convey that everything is okay, right? And that you're happier and more bullish than ever on a specific stock when it has done nothing in way of performance. Call it like it is. My attitude doesn't suggest that going forward the stock isn't going to go up. It doesn't suggest that. What it merely suggests is to be fair with the fact that potentially you made a bad trade. All right. And in the short term, it's a bad trade. You don't try to have to make a bad trade worse by, continuing to double down on it, put new funds to work. I mean, this particular company in question right now that you guys know I'm talking about stands the chance of a potential delisting and a reverse stock split. So my current share position in that is reflective of the current risk that I'm comfortable keeping on the table. And that's it. That is it. Am I happy about it? No, that's not why I invested in the company. All right. A radical shift in direction is not why I cover a company, not why I invest my hard-earned dollars into it. No way. It's not what I'm looking at. When I compare and contrast my new bullish conviction on the speculative side for 2024, I look top to bottom, and I look at an upper management that is a far cry from the radical shift that has happened in Hyliion. Not so much at the top level, right? But firing, 150, 175 workers out of 250. So what is it now? Is it just a company of upper management making overblown salaries and you're more bullish than ever? You're a stronger man than me. You're a stronger investor than me if you're a guy or a lady out there that has that type of conviction. I don't have it. Maybe that's my problem as an investor. Oh, Ryan, you're this and that. You're that and that. Look, I hold the shares. All right. I'm fine holding the shares. I sleep easy if the shares. It doesn't affect my ability to put food on the table. I'm fine. But have a little common sense with this application, my friends. You'd be so much better that you did, and probably have a little bit more fun doing this gig. Very cool stuff. We got Holland in the house. Great to see you, my friend. Thanks for stopping by. Got a couple minutes here. If I had to get some shout outs. And Jared, awesome, man. Happy holidays to you, brother. Good stuff. Got a Viper in the group, man. Got Jamie's in the house. Good to see you, Jamie. Hope all's well with you. Good stuff, man. If you can believe Thomas Seeley, the Carno is 50% efficient. This beats 33% efficiency capital. I'm bullish on this specific aspect. Okay, but it is premature and certainly irresponsible. At least I'm gun shy. I'm gun shy to jump onto another addressable market when we have just put $400 million into another addressable market to the tune of $1 trillion of addressable, and we have nothing to show for it. Yeah, I'm a little more. I'm good. I'm good. I'll own my shares at these low levels. The cost of capital is very, very, very low. Okay. But as far as getting excited, no, I'll chalk it up as a prove it story. And if he does, so be it. It's business. If not, I will not be surprised. I will not, because what I said is that it's irresponsible to you can hope for things to happen, but just to put too much stock into what actually will happen is probably in the irresponsible category, and I won't do that again. That's not going to happen. I can make way too much money value investing, way too much. It's way too powerful. I have proved it over and over and over again, and when it was convenient to do so, I had people come on the channel and pick fun at my message. Hey, 8 to 9 to 10, 11, 12%. Who wants 12% in the return when I can get 50, 100, 500%? You know? And so it was easy to put those criticisms across the table. Where are those people now? Where are they? They're gone. They're gone. Tuck tail. Get in red hot in the stock market. Man, this is incredible. I'm retiring. I'm the man. And I'm gone. Now, the game is to have some staying power here in the stock market. That's just it. And look, if you don't want to relate with that message, you're perfectly able to switch off and go find some sort of a channel that will agree with you on everything. Okay. Anymore, I don't care if people disagree with me anymore. I don't care. I'm right. So they can disagree with me all they want. They can deploy whatever strategy they want. That's no problem. I will say, even as a not seasoned investor, having the privilege to invest helped me in various ways that I would have never done it by pure work and grind. Totally agree, man. The learnings that you will pick up are insurmountable. That's for sure. I just want to make $1 in the market. I kind of felt that over the last 3 years. I was like, what's going on here, man? This is crazy. I got cashews in the house. Happy Friday. Fantastic. Good to see you. Yes, gained access to first brokerage account due to being issued company stock. Anyone old enough to remember those days? Most definitely, my friend. For sure. They're selling advertising. They're not trying to help the retail investor. That's totally true. Why we we'll try to stay close to the vest here on this. Try to deliver hard, concrete testimonials on what it is that I see, what it is that I witness works or doesn't work. There's certainly things that have been deployed that don't work over the times, and that's okay too. Matt, great to see you, my friend. Thanks for stopping by, man. It's great to see you. Verizon and T are basically bonds. I don't know, man. They're almost worse than bonds, to be honest with you. Everything that's the heart of a teacher. I do. I love it. I really do. I wouldn't do it if I didn't love it. I wouldn't do it if I did. If I thought I was no good at it, I wouldn't do it either. Yeah, I don't mean to come across as arrogant or pompous at all, but I think I've got the ability to convey information in a way that's unique. Um, unique. Um, Sometimes raw, sometimes abrasive, and that's all right, as long as the message hits home for people. And if the message hits home enough for people to take action upon that motivation and actually render positive results, well, then there you go. I don't need to say anymore. It's the results that we're achieving. And if we don't receive the results, it's not worth putting the message out there. I've followed and learned so much from him over the past years. It's fantastic. You had all the knowledge yourself, man. It's good to go. Very cool. Well, we'll start to wind it down here pretty quick, guys. I'm starting to lose my voice. Use money transfer lockdown option for your Fidelity. Keeps crooks away. Will do. That's a good idea. Thank you. Money transfer lockdown. That's a good one, man. I will remember that. Thank you. I will go do that right now. Thank you, my friend. Very cool. Good tidbit. We don't get lucky on I2. We make money. Right, is the truth for all the non-believers. Oh, that's an interesting comment. Yeah, I think investing is cool because you get to separate all emotion. You get to adhere with this idea that I like, which investing, your relationship with your money is all business. There is no emotion in stock market. You've heard that. That is legit. Any emotion in the stock market is something that you have manifested yourself. That's your fault. It's your problem. Now, in its purest form, a stock that is owned by an account that you own, that you have ties to, is just that in its purest form. Any type of emotion attached to the stock being up 1 week or down 1 week, that's your fault. That doesn't exist in that purest form, right? Um, the potential of those accounts, don't exist until they are material, right? Until they come true in nature, right? But I totally agree with you. I think way too many people maybe think that you have to get lucky or you start a business and then you prolong this idea that somehow you're going to get lucky and you need to be in the right place at the right time. I don't know. I don't want to look at my life and say, well, if I would have zigged instead of zagged, I would have made it as opposed to not. I would rather just adhere to a program that gives me a better chance of being in a better place down the line, right? So it just makes more sense to me to spend the majority of my focus on something that I can control as opposed to focusing on something that I know I can't control. And quite frankly, I don't really want to rely on in the end. So pretty cool. Bought into Jeppy is a good fund. Matt knows a lot about Jeppy. Now at 1,900 shares, there's no looking back. I think we get 2 payouts. Fantastic. Now you got it, man. Thank you for sharing that. Good stuff, man. I got Eric's in the house. Happy holidays to you and the family, brother. I always appreciate you, man, for sure. I'm very, very happy for you, man. Very happy for you. I'm happy you're in the group. Very cool. You guys are talking with each other. Very cool stuff. Wife's birthday. Tell her happy birthday on behalf of the Independent Investor Channel. And that's a fantastic segue into closing it down for this weekend. I want to thank all the devote subscribers to the message and invite any new subscribers or would-be subscribers to the message. Help us support the message. Help us build us out, man, for sure. We're building a wonderful core nucleus of subscribers that adhere to a common message and are creating results for themselves as individuals. It's that simple. The attributes and the power of the message comes through each and every one of those results. Anything else is uncivilized as far as I'm concerned. It's all talk and it's all propaganda. But until we can start producing results for real people and real investors, we're going to keep on keeping on with this message that I do believe scales to the masses. I don't believe you have to get lucky. I believe that you can wake up, you can give yourself your own kick in the ass, provide yourself with a little bit of motivation, a little bit, come to the I2, I'll provide you with the rest. And the rest will be history when you relate back on your life and minimize, if not eliminate, the potential for regret because you did everything you could do through free will to control the end of where you end up in life and the fate that will inevitably be encountered by you. I want to thank all the subscribers. Thanks for tuning in to the fastest 60 minutes on YouTube. We will be back next week on the Independent Investor Channel live stream. Be well, be safe, enjoy your weekend. We will catch you next week.